What makes Bitcoin price go up? Is it scarcity? No, it's not scarcity. Is it hash rate? No. So what is it? And I think this statement is exactly the right answer to the question. Bitcoin price is going up because it's a growing network of people who think that Bitcoin is a good place to store value. Okay. So what do I mean by that? There clearly is a network effect going on. Bitcoin started in 2009. There was about 100 users of Bitcoin. There was 100 people mining Bitcoin. They weren't even sending Bitcoin to each other. They were just mining it. So the network started growing, and the number of users of the Bitcoin network, the number of addresses is growing at roughly
The volatility of Bitcoin has long been a double-edged sword, attracting traders while deterring conventional investors. Fred Krueger, however, adopts a different strategy. According to him, Bitcoin's price fluctuations are not defects, but rather characteristics that are necessary for its sustained development. Krueger claims that this volatility highlights Bitcoin's independence from conventional financial systems and presents chances for individuals who are able to follow the market's rhythm. According to him, Bitcoin is becoming more than simply a speculative asset. It is gradually escaping the sway of Wall Street and becoming a global store of value. We're about to dive into his latest insights, but first, make sure to subscribe and hit the bell icon to stay updated with our latest videos. Thank you, and enjoy the video.
Me just holding Bitcoin gives it value. If there's more people like me who don't do anything with their Bitcoin, but just hold their Bitcoin, that attributes value to Bitcoin. And people like me fundamentally believe that when they want to sell their Bitcoin, there will be somebody there in whatever country I end up being, or I end up giving it to somebody, that Bitcoin will have value. Most of us believe that it'll have more value than what it has today, but some of us just need to make sure that it doesn't go down in purchasing power. So if you're living in a place like China or India, and you're not really happy with the kind of the government or the banking system or just the entire country, you want to get your money out of the country. You don't necessarily need it to grow in value, grow in purchasing power. You just need to have it not go down. And I think that fundamental belief is, a lot of people are starting to say, well, this thing is risky. It's moving up and down a lot, but I don't need it for the next year or two. I don't need that money. And I think it might be a good place to just park it for a period of time. What makes Bitcoin price go up? Is it scarcity? No, it's not scarcity. Is it hash rate? No. So what is it? And I think this statement is exactly the right answer to the question. Bitcoin price is going up because it's a growing network of people who think that Bitcoin is a good place to store value. Okay. So what do I mean by that? There clearly is a network effect going on. Bitcoin started in 2009. There was about 100 users of Bitcoin. There was 100 people mining Bitcoin. They weren't even sending Bitcoin to each other. They were just mining it. In 2010, they started sending it to each other. We had the first real exchange, Mt. Gox, in 2013. So the network started growing, and the number of users of the Bitcoin network, the number of addresses is growing at roughly the cubed of the time since the Genesis block. But there's also other kinds of network effects going on here. And we'll get into those a little bit later. So what are people buying Bitcoin for? Well, they're not buying it for just a very short amount of time. Although initially they're buying it because they wanted to buy some drugs on Silk Road. But a lot of really since the beginning, people were buying and holding Bitcoin for a fairly long duration. It could be months, it could be years. I've held Bitcoin for not a decade, but it's getting into a lot of years. I think I'm kind of normal. This is just sort of a normal thing. You buy Bitcoin, you don't sell it. You're not using it for day-to-day purchases. So it really is right now. It's being used as a store of value. But there's a growing network of people that are starting to use this thing as a social value, store of value. And so to some extent, this is geographical, because if you need to sell your Bitcoin wherever you are, you're going to need to have somebody give you back that currency in that country. It could be USD if you're in the US. It could be fiat in India. It could be so. The rails there are important. Eventually you'll be able to buy things like houses directly with your Bitcoin. And so, as this network of Bitcoin believers grow, all the other parts of this world grow. So fiat rails grow, exchanges grow, banks grow. We're going to see in the U.S. the ability to take your dollars in your bank account and get USDC, and then take that USDC and swap it for Bitcoin, or take Bitcoin, swap it for USDC, and then move it back to Bitcoin, to the bank system, or even maybe buy Bitcoin directly in your bank. So all these things are coming, and all of these things contribute to the network effect of Bitcoin.
Fred Krueger eliminates a widespread misconception regarding Bitcoin, which holds that an increase in its hash rate inevitably raises its price. The hash rate does not directly affect the value of Bitcoin, but it does improve network security. According to Krueger, the price should rise as more miners join, but in reality, the opposite is true. As Bitcoin's price rises, more miners join, increasing the hash rate. The fact that regular investors do not base their purchasing decisions on mining KPIs is another issue he makes. Rather, since they believe Bitcoin has long-term potential and is a reliable store of money, they invest in it. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
Scarcity is needed, it's necessary, but it's not sufficient. So if you look at Bitcoin Cash, it has almost the same code base as Bitcoin. Same with Bitcoin SV and all the other forks of Bitcoin. But because they have the same code base, or close to the same code base, it doesn't mean they have the network effect. So, in 2017, at the end of 2017, when we forked over to Bitcoin and Bitcoin Cash, we had sort of a VH1 versus Betamax situation, and Bitcoin Cash ended up being Betamax. Is it better? I don't know. You could argue maybe that the bigger blocks would have been fine. You can argue the opposite. It doesn't matter, because the world chose VHS. The world standardized on Bitcoin. So Bitcoin Cash ended up not really working. And the Bitcoin Cash relative to Bitcoin is a straight line down. So the flaw in thinking about scarcity is you're looking at a necessary and not sufficient condition. So this entire stock to flow model that was popular, actually starting in around 2019, was basing everything off of scarcity. And Giovanni sensed this was flawed. Others sensed it was flawed. Corey Klippstein sensed it was flawed. And now the model is clearly mathematically broken. Completely mathematically broken, doesn't hold up. It was changed, it was tweaked, but it was conceptually broken right from the start, because scarcity is not what drives value. What drives value is the network, and so that's really the key. And I think Rob from our spaces, Silicon Valley Rob, kind of really nailed this. He's like, look, I've invested in a lot of businesses. We've invested in a lot of businesses in Silicon Valley. It's all about networks. And this is no different. It's a network. It's a network of people who believe in this as a store of value. That's what it is. What about hash rate? Well, a lot of people look at the hash rate and they're like, wow, the hash rate's going up. That means the Bitcoin price has to go up. Well, nah. Hash rate does make the network more secure. And so you might think there's a relationship where hash rate is driving Bitcoin price. And I've argued with this with Giovanni. I mean, to the point of like I had to eventually ban him. Bitcoin price plus technology drives hash rate. It's not the other way. There's a flow of causality between Bitcoin price and hash rate, and not hash rate to Bitcoin price. And if you think about it, nobody is buying Bitcoin just because we hit 1 zeta hash. It doesn't matter to the average person buying it. Just think of some guy in China buying Bitcoin. He's not going, let's check the hash rate today. The hash rate's higher. I'm going to pay more for that Bitcoin. No, that's not what you're doing at all. It's just, you're going to be going into the network, whatever the network price is, and you're going to be buying it at that price. So at the end of the day, what's driving all of this is we have a network effect of end users. And so, it's every single day, there's some new person, some new Fred Krueger that's coming in and going, wow, this Bitcoin thing really makes sense. It's magic almost. And, I can put Bitcoin out of government control. Lots and lots of people seem to be adopting this. This Satoshi origin story is amazing. The more I find out about it, the more I love it. I get these 12 words or these 24 words, and I can hold my Bitcoin, and I can walk cross borders and everything. And it just works, right? And it 100% works. I learned how to send Bitcoin, like Gladiator just recently learned. And it's magic. Once you really understand it and it hits you, you're like, oh wow, I love this. And that's why Ben and I wrote this big Bitcoin book, because we just really felt like we had this kind of magic philosophical stone that we were just, we totally love Bitcoin. Okay.
Fred Krueger highlights an important aspect of Bitcoin's worth. Scarcity is insufficient on its own. Although Bitcoin's restricted quantity is necessary, value cannot be guaranteed by it alone. He draws attention to the fact that while Bitcoin Cash and Bitcoin SV forks have identical code bases and scarcity characteristics, they have not gained the same level of popularity. According to Krueger, this is comparable to the VHS versus Betamax conflict, in which VHS prevailed due to wider acceptance, even though Betamax may have been technically superior. Similarly, Bitcoin became the standard not only because of its scarcity, but also because of its expanding network impact. Additionally, Krueger criticizes the widely accepted stock-to-flow model, which only considers scarcity as a factor in determining the price of Bitcoin. He contends that because this model disregarded the significance of network effects, it was essentially incorrect from the beginning. Value is not solely derived from a finite supply, but also from users, investors, and transactions within the Bitcoin ecosystem. He also eliminates myths regarding the hash rate of Bitcoin. A higher hash rate increases network security, but it has no direct effect on cost. According to Krueger, the price increase of Bitcoin actually draws more miners, which raises the hash rate rather than the other way around. Ordinary investors purchase Bitcoin because they believe in its long-term potential and the freedom it provides from government-controlled money, not because they notice a spike in the hash rate. Krueger concludes by highlighting the magic of Bitcoin, which is the knowledge that you may possess your wealth, use it internationally, and participate in a decentralized network. The real factor driving Bitcoin's value is this network effect, which is based on acceptance and belief. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.